In this video, we're going to talk about what's inside a playbook. So everything we've been talking about so far has been leading up to us creating what is the core of our business. The core of our business, the foundation of our business is the playbook. We need a playbook that consists of plays that have edge in them. In this video, we're going to discuss what you should have in your playbook, or what I suggest that you have playbook, or what I suggest that you have in your playbook as a start. Now, I have built a playbook that has taken time. And what I do is I store my plays in Notion. The reason I store it in Notion is because it is a great way for me to have a database that's easy to organize. Because as you can imagine, my plays have grown, right? I have different setups for the holidays, setups for when times are good, setups for scalping, setups for day trading, setups that are more swing trade types of setups, setups for the summer, etc. So for me, I have done this in Notion because it helps me organize it easier. I can search for different plays based on names, and I can store a lot of different examples for the plays in my playbook easier. But what I'm going to do, if you don't have the playbook template, I recommend that you get it for speed. It'll help you quickly set up your playbook and organize it. If you don't have it though, what I'm going to do is I'm going to start off in a Word document, because this is where I started. I started in a Google Docs document, and we're going to build it now together. So I'm going to show you exactly what I would do if I was in your spot. Let's say I didn't know about Notion. Okay, if you can follow along and use Notion as well, but I'm going to just do this for the people that may not want to purchase the template, may just want to create it from Google Docs. So this is how I would do it. Okay. So remember, at the start of every day, we are going to look for plays in our playbook, especially plays that are A grade plays. Okay. That's what we're looking for at the start of every day. So what happens at the end of the day? The end of the day, we're writing in our daily report card. We're writing in the daily report card if we took playbook trades or not. And if we saw a setup that we could potentially add to our playbook, we're going to document that in our daily report card, and we're going to store it in the playbook. Go ahead and store the screenshot in the playbook, and it'll enter into the section of trades that hasn't been validated. Okay. So I always keep a section of trades that haven't been validated. They're ideas that I still need to validate. We're going to go through the validation process in a few videos coming up, but we're going to learn how to validate the setups and then grade them. Okay. So if I was starting off, what I would do is start a document, my trading playbook. Okay. Now, here are a few things that you need in the playbook. All right. What I would recommend is that you place in your playbook, you're going to have your validated plays. So these are your plays that they're your go-to setups. You validated them. You know that they have edge. I would have the unvalidated somewhere. You don't have to name them like this, but this is just like a backlog of trade ideas that when you have time, you can explore. Let's say I have scalping ideas. Let's say I'm day trading, but I have scalping ideas. Okay, so I'm going to store these scalping ideas in my unvalidated section until I have time to back test them and prove that they have edge, right? Remember, we need a playbook that has plays with edge in it, right? Our entire business revolves around us being able to identify plays that have edge, being able to trade them well, and being able to give proper size to them. They're a good risk to them, right? And then what I would have is a risk table. And this risk table is going to have your profit risk, break even risk, and drawdown risk. So you don't have to put the risk table in your playbook. Some people choose to have a note card. You can have a note card that you add to your desktop. You can put this note card like right on your desktop, or you can print it out and attach it to your screen. I like to have mine in my playbook because I like to keep everything in the playbook, right? Just one, this is my book. This is my core. I go to my playbook, look for plays. I know what risk that I'm risking. I like to have mine in my playbook, okay? So today what we're going to talk about is what's inside of the validated plays. Okay. I'm going to show you, I'm going to basically build out what I have here. Okay. But I'm going to do it in a Word document. So now we're going to talk about the validated plays. Your validated plays, what I recommend, should have a few variables, and these are going to change. So you don't have to have all of these, but this is what I would recommend. Okay, and then we're going to do an example. So what I recommend is that you have the big picture. If you want to go by the 4 market phases, this is what I go by. Right. So I'm listing, like, in the market, what's the big picture? What's happening in the market? Okay. So for me, I use the 4 market phases. For you, you may want to say the big picture is rallying. The big picture is bearish. The big picture is ranging, right? So what is the big picture? Long term. Why? Because the market movers, they think in the big picture, the longer term, because their contracts, in order for them to rally the market high, for them to take profit later, in order for them to short the market, go low, in order for them to buy at a bargain, buy at a low price, they aren't able to do this in 15-minute candles or 1-hour candle. It takes them days, sometimes weeks, in order to take the market to a certain point for them to then turn around and make profit. So we want to be looking at the big picture. Okay, what's happening? Next, what I recommend is that your technical analysis. So this is like your intraday technical analysis. Like what do you need to see today in order to trade? Next, I would have any intraday fundamentals. So some people won't, I don't think you necessarily use this one at this point. What I mean by intraday fundamentals, do you need to see a CPI report? Do you need the NFP to help you? Do you need unemployment intraday to help you? Is there a certain news catalyst that you need to help this particular setup, right? So if you have a setup for CPI, you may say, I trade CPI when the big picture is a certain way, when my technicals line up a certain way. With CPI, I'm going to put a buy stop or a sell stop, right? So if you're not there, don't worry about it. But you want to have the intraday fundamentals as well. What I mean by fundamentals are any reports, any releases from the news, any data releases, right? That will cause a short-term spike in the market. If you go back to the intraday fundamentals video, you'll remember me talking about the short-term spike news, right? So we're intraday traders. So if there's any intraday news that are going to come out that could help us out, we'd be looking at putting that information here, okay, as a part of our playbook. Because remember, in order to have discipline in the market, you have to document the ideas and validate them, and then only trade what you've documented and validated. That's how you avoid, quote unquote, over trading, right? That's how you avoid just being in the market gambling, right? As if you're in a casino. So next, you're going to have your entry and, well, I call this trade management. So entry criteria here, exactly how you're going to enter. You need to list that out. And exit criteria, exactly how you're going to exit. So when you put this in the playbook and you validate it, so for me, I've validated 1 to 3 as a minimum. So some people say it's hard for me to hold. The reason why it's hard for you to hold is because number one is you haven't validated it and proven, just like a relationship, right? If you don't know someone, you won't leave your wallet with them. If you don't know someone, you won't trust them with your heart, right? If you don't know someone, you won't be intimate with that person because you don't know them, right? But once you validate that this is real, this person is who they are, you can trust this person, then at a certain point, you're willing to put your life in their hands, right? Some of us have friends that we would trust with our children. We would trust with our spouse. We would trust with our secrets. But we built trust with them because they have proven that they can be trusted. So it's the same with your plays. You have to prove to yourself that the play can be trusted, that it performs and will make money. So the entry criteria and the exit criteria also have to be back tested. So when you go back and look at your plays, you'll say my entry criteria, 15-minute candle, 5-minute breaker structure. You'll go back and look at how many times out of 40, out of 50, this entry criteria worked. And if it works 90% of the time, you're good. You can trust it. Then you go also and look at the exit criteria as well. I'm going to exit at the next 4-hour zone. I'm going to exit at the 1-hour zone, etc. So you back test this. You say, okay, out of 40 times, this works out. It hits the target 35 out of 40. So once you have that data, it's easier for you to trust what you're seeing. Okay. So exit criteria, trade management. Okay. And then for me, I'm listing the grade. What's the grade of the setup? I always need to know the grade of the setup. Okay. And is it A plus, A, B, or C? Okay. And we're going to talk about how to grade setups in another video. So now the last thing that I'll have is an example. Not one example, but examples. If you remember, I discussed how the market rhymes. History rhymes. So people say history repeats itself, right? That's saying, but actually when it comes to the market rather, it rhymes. So you may have certain plays, like when you first start as a beginner, you're looking for heads and shoulders. You're looking for double tops. You're looking for triple tops. You're looking for these different patterns that look exactly like the drawing that you see, right? But rather you learn as you get experienced that the market, those patterns don't necessarily repeat exactly, but there's a rhythm. They rhyme. It's similar, right? So there's certain principles that you learn. If you learn those principles, like a break and retest of a zone, that's a principle. So the picture may look differently, but the principle is the same. It was a break of a major support or resistance. It came and retested that area. No matter how the chart looks, it may look very ugly. The chart may not look, the chart is going to look all different. So you want as many examples that you can pull from, because what I often do is I'll have two examples side by side, right? I'll have the playbook on one side, and then I'll have the market, the actual live market on the other. And when I do this, when I bring these side to side, you can see the similarities and it gives me confidence. I'll say, okay, my playbook has something that looks almost like this right here. Same principles, same big picture, same technical analysis, right? Same entry and exit criteria. So this is why you want these examples, because you have an archive, a database of pictures that will help you make decisions. So you won't be in Discord saying, hey, what do y'all think about XAU? What do y'all think about gold? You will first go ask your playbook, and then you can bring your playbook to Discord and you say, hey, you know what? I have this in my playbook. I validated this. Let me get your opinion. Do you think that this is the same scenario, right? That's how you should approach Discord. Okay. So these are the variables that I recommend that you have: the big picture, what's going on, intraday technical analysis. Okay. Intraday fundamentals, your trade management, entry criteria, exit criteria, your grade of your setup, and some examples. Okay. So now what we're going to do is go to TradingView, and you can do this in MT4, MT5 if you like. But I'm going to go to TradingView, and we're going to use a rally-based drop setup on the 4-hour US 30. And we're going to enter this into our playbook. Okay. So this was one of my favorite setups. I actually traded this live. All right. So what I would do if I were you, I would just create a table. So you can create a table, and in your table, you're going to have, all right. So what I'm going to do is I'm going to put the setup, the name of the setup. Normally, I just describe the name of my setups as what they are in the big picture almost. So here so you're going to have the setup, you're going to have the technical analysis, you're going to have the fundamentals, trade management, and grade and examples. I'll widen this out. So this is going to be my decline phase, rally, base, drop. That's what that setup is going to be. You can get as fancy as you like with your the names of your setups. For me, I don't really get too fancy. So now, normally I'll have a description of what's happening here. Okay. So in this stage, the daily is on the decline in the downtrend, and the 4-hour supply is very high probability here. Okay, because the market is going down, right? And most likely any 4-hour supply that is created will be respected, even if 4-hour starts to trend upwards. If the daily is still in decline, we will sell at the 4-hour supply. Okay. All right. So I'm gonna show you what this looks like in the chart. This is me. I'm gonna go back and forth while I'm breaking this down. So what I just wrote there was that if you look at this is gonna be the setup right here that I am gonna break down. Bring the replay. Okay. So if you look at what happened with US 30, so US 30, it did a markup phase here, and then it entered into distribution, did a fake out, and then dropped. Later on in a more advanced course, I'll be explaining these fake outs, this upward thrust, or there's times when they do a downwards thrust here, spring, call it a spring. They go down, fake everyone out, and then go back up. And they're doing these tests to see if there is supply that's going to help them push the market down. If not, they're trying to ensure that the path upwards has a small amount of resistance. So they're gonna shake out the weak traders when they're doing this here. So the weak traders being anybody that's short, they're gonna accumulate their orders, and anyone that is going long, like somebody may have went long here and they got stopped out. So they're gonna take out the weak buyers as well, because the weak buyers, they want to take them out as the market goes up. They want to take them out because weak buyers aren't going to hold as long as they'll hold, right? So if they have a lot of weak buyers with them on the ride up, when those weak buyers sell their positions, they are going to have to acquire them in order to continue moving the market higher. So what we're going to do is here we see that it entered into some distribution here, and then boom, broke the structure of the daily and officially went into a decline. So when I see that daily break of structure here, that is a signal to me that we're going to start to sell. So went up, boom. Some would say this is a double top. All right, listed in our quick patterns video. So here, break of structure. I just say break of structure, right? So break of structure, come here. Now, so what I described in my playbook was that in this stage, the daily is on the decline. Okay, so now the daily has entered into the decline officially. Okay, officially entered into the decline phase. And what I'm going to do now is I'm going to be looking for supply zones. So I'm going to go to the 4-hour time frame. If you see, I have these 3 screens in at once. If you press tab, you can tab over between them. Okay, so when I have this one open, you press tab and it takes you over to that same screen. All right, so now what I'm going to be looking for is supply zones. So this one here, rally, base, drop. Okay, so here what I'm going to do is I have my basing candle there, and I am going to mark this as a supply zone. Okay, so marking that as a supply zone. So what I want to see from an intraday technical perspective is I want to see, right, price return to the supply and give me price action for a sell. So my entry is based off of what? So for US 30, most of my entries are based off of 30-minute candle, 15-minute candle, and 5-minute break of structure. This is for the A setups. Okay, whenever I have a 30-minute or 15-minute candle and a 5-minute break of structure in my zone, this is normally an A setup. Okay, so I'm going to put this as an A grade. For me, I know this, but you'll have to go in and validate it. You have to go and back test it. Okay. All right. So the fundamentals, I'm going to put none. So again, if you want, you can omit this. You don't have to have this. You know, if your trades don't depend on fundamentals, you don't have to have it. So what I mean by the 30-minute, 15-minute, 5-minute break of structure, that's my core. You can also list here, I could say a 4-hour candle. For me, US 30 is gone most of the time if I wait on a 4-hour candle, right? So for me, I don't normally, have that there. Okay. So if I go to US 30 here and I look at, so this is the 1 hour. Now, what I've learned is that price doesn't always come back all the way into the zone. So what I'll do, if it touches the zone and gives 15-minute price action, then I'll be willing to get in. So here I have 15-minute pin bar here, 15-minute bearish engulfing. That's enough. That's enough for me if I see those 2 candles, right? So what I'm going to do is this is a 1 to 5 here. So I'm going to rewind it a little bit more because I want to tell myself that once I see these, this formed here, then with my stop loss above the candle up there, I have a 1 to 6, which is really good because I could exit out of here and have a 1 to 3 at this zone. Okay, but if I hold it to the 4-hour zone, that's a 1 to 6. Excellent trade. Even the 1-hour candles are good here. The 4-hour candle is great here. Bearish pin bar, that's great. We good. 15-minute. Okay, but so what I'm gonna do is I'm gonna get the 15-minute here, and I'm gonna say, okay, this is my entry. There's gonna be a 5-minute breaker structure here as well that we can't see, but also then we had a 15-minute breaker structure here. So that's also another great confirmation. So, but normally what I do is 15-minute candle, 5-minute breaker structure, a setup. If I get a 15-minute breaker structure, that 15-minute breaker structure upgrades the setup to be a plus setup. Okay. So, all right. So now we go back to what we were doing here, where what I'll do is, in order to help have a visual, I normally will have a few sets of things here. Okay. So what I'll have is higher time frame picture, lower time frame picture. Okay. So I'll have daily, 4-hour, 1 hour. That's me. You don't have to get so detailed in the beginning. But for me, it's just become so natural that I have the daily, the 4-hour, and the 1 hour. So I use a shortcut to take a picture. Okay. So it says link to chart, image, copy to clipboard. Or if you don't want to use a shortcut, you can just copy link to chart image. So here I put the higher time frame picture there. Okay, so it has my daily, 4-hour, and 1 hour. Okay, so I can see what happens on the daily. It's in the decline, break and retest. Supply zone here. I have candles that are very intriguing. Look at this, supply was touched, bearish pin bar, then an evening star there, right? So these are all pictures to help me memorize. If I see something like this, that I have no reason to hesitate, I have to shoot it, right? When I go back and validate scenarios like this, they all work, right? So here I'm gonna have this, and I'm gonna show it like this, like already played out in my playbook. Okay. When I do my daily report card, I'll get a before and after. But when I do my when I'm showing the setup in my playbook, I'm normally gonna take it where it's played out so that I could see that it works. Okay. So I'm gonna just be documenting things here to store here. So if I on the daily, we have a breaker structure here on the daily. Okay, breaker structure here, enter into decline. Now we have the supply on the 4-hour as well. Okay, 4-hour supply. Okay, the 1 hour also gave us great bearish confirmations there as well. So I'm gonna take a picture of that, and then we're gonna put that higher time frame in there. And then what I also have is the lower time frame. Okay, so the lower time frame, I'll have the 30-minute. And again, this all I've developed this over time. So I have the 30-minute, I have the 15-minute. So when I'm looking at the charts, I have multiple screens. I'm looking at multiple confirmations that help line up. Look at this beautiful bearish confirmation This is I think that's the first supply, first time it came up. So that was our daily break and retest before we even had a supply zone that we wanted to trade. And so I'll hurry up and get it up there. Okay. So 30-minute. Beautiful confirmations here for us to enter into the trade. So I'm going to capture the 30-minute. For the sake of the time of this video, I won't write everything out, but I think you got the point, right? So I have 30-minute, I have my 15-minute, and then let's see if I can get to, see how close I can get to the 5-minute before they say there's not enough data points. So here I'm interested in the confirmations. Okay, so 12-minute, let's see, 10-minute, 9-minute, 8-minute, 7. All right. So here we have a break. We have, let's see, 6-minute. Oh, got the 6-minute candles. Okay, so what you'll see a break of structure in here if we look at it. All right, so idea though is what I'm showing myself, right, and giving myself is just more views, right? So I'm going to look at here I have the 30-minute, 15-minute, and I would have the 5-minute here. Okay. So I would just come in and mark down like what I see on the 5-minute as well. Okay. What I'm seeing on the 5-minute as well as a proof that this is a good enough setup here for me to enter. Yep. Look at this. It struggled. It made the 15-minute candle, 30-minute candle, and it made here's a resistance that it can't break here on the 5-minute. This is just giving us more confirmation for us to enter into the trade. Okay. So you would store these kinds of things to help yourself. For me, that 5-minute break of structure, the 5-minute zone there, seeing it where price can't surpass it, it's having struggle there, is just another confirmation of what's happening in real time. Okay. So what I do is I take a screenshot of this one. As well. And I'll put the lower time frame in my playbook, right? And then trade management. So I've already entered the entry criteria, right? So I'm entering what am I going to do? So entry here, how am I going to, so my entry, I have the entry criteria, but am I going to enter 2 positions or 1 position, right? This is where you can enter like how you're going to enter, right? So I may say 3 positions. Okay. And then my exit is 85% first position at 1 to 3. At the next 4-hour high or low. Okay. You're literally going to, list out what's your exit. Okay. So then then you're going to enter, okay, 7.5% for next high or low. So what this would look like for us is, let's say that we're going to hold this one. We're going to hold 1 position here as 1 TP. Then we have another TP maybe at the next strong zone, right? So that's what this one is saying. So we're going to mark out if that's how we're going to trade, right? So these are just examples. So these are examples so these other positions, so this is my intraday position, and these other positions become more like swing positions. And sometimes US 30 just falls out of the sky and it'll just knock out all the TPs. Okay. So what you can list here if you are comfortable, right, is, first position, you take in the majority, 7.5% for, the next high or low, and then 7.5% for your high or low. All right. For next high or low. So after that one, right? So I had 3 of them here. So some people, when they use fibs, this can be fibs that they use to determine. All of my things are based on zones that have been touched, right? Or supply and demand zones as well. I'll be looking at supply and demand, right? So next supply or next demand, okay? I'm leaving this general for you because I don't want to overwhelm you. But if you look over here, this is a demand zone. And you'll find that most of the TPs, if you look at like where the market is reacting, this is what I do. I'll put my TPs based on zone. So this is a zone. See, look how the market reacts over here, right? So that's a zone. That's my first TP. Second TP is at the next zone, which is here, which happens to be a demand as well, right? Drop, base, strong rally. And the reason I want to take profit here is because it's highly likely, since this is a demand zone, that potentially price will reject from there. Okay. And then here, this is another zone right here. So if price melts for some reason, I'm holding, then I'll be exiting at the right places. So when it comes to trade management, entry, 3 positions. Okay. My exit is here. Okay. 85% first position at 1 to 3 at the next 4-hour high or low, and go to break even. So what I'll do is I'll go to break even after my first position hits 1 to 3. I don't go to break even before that. And the reason why is because many times I haven't let the trade play out and develop. So if I don't let the trade develop, then I'm going to get stopped out too early. So I don't want to get stopped out too early. And the reason why is because I want my 1 to 3 in reward, my 1% risk, 3% reward. I want to make that, right? And that's the only way, as I showed you in the risk based on percentage video, that if you don't let that play out, then you're going to cut yourself short and cheat yourself out. Okay. That's my exit, my trade management, right? So I'm going to exit 85% first position. I'm going to go to break even. So I'm going to take all of my positions that are still open, these 2 here. I'm going to place them at break even, place the stop loss at my entry point. That way, if price returns and goes against me, I don't lose anything. Okay. And I use the trade manager to do this. So with Magic Keys, all I do is I set 1 position and I put a partial TP. Okay. So partial TP, 3 partial TPs. And it automatically takes 85% for me, goes to break even, and then 7.5% on the next one, 7.5% on the next one. So I'm just more hands off at that point, and it's mechanical, and it's a system, following a system that I've already validated. I'm not making emotional decisions in real time. There's something called, dynamic risk, dynamic scaling out. This is scaling out here, but you can also do it in a more discretionary manner. But I recommend in the beginning, just be robotic with it, be mechanical. So here in the examples, this is where I would place all my trade examples. So if you look at my playbook here, I have examples here and I have notes for myself, right? So this is where you put all your different examples. Okay, just list out all the different examples there. And I'm gonna show you this is my older playbook, just so that you'll understand that, this is something that is possible for you, right? You can just do it in notes. So here I have all these different examples here. Examples, all these different examples. Okay. So you can do it in a Google sheet. But for me, my playbook is growing. I don't want to organize it all in one sheet, but I hope that this was beneficial. What I mean by examples is you want to go back to the chart. Here's another example I'm going to show you. So this is supply, and then price goes down and then comes back up to supply again. This is another example that we could list. We can go here, look at the 4 hour, look at the 15 minute, look at the 5 minute. Okay. And right. So if you look at the 5 minute, the 15 minute, look at this in the zone. Okay. Not only do we have a break of structure here, see, this is a break of structure, right? Look at price coming here, rising up, boom, breaks down. But in the zone itself, we have big bearish candle. So remember, if you think about the law of supply and demand and how supply and demand works, when we have this big momentum up, and as I told you earlier, price rejected from the demand zone and blasted up, right? So came here, back to supply. And remember, we're still in the decline. So we're going to sell at supply. You could have bought here, but for me, I don't necessarily like to buy against the momentum because I don't know. Some people bought here, may have thought they were going to hold it up and got obliterated, right? We don't know that price is going to reject and go back up. These are the higher probability setups. These are 3 setups here that you could have taken with big reward. Okay. But we look at this big momentum that was halted. That means that there's supply there that absorbed that momentum. They couldn't go up further. See here, the bullish candle tried to push, not enough demand, not enough aggressive buyers, big aggressive seller. Once this printed in the supply, that lets us know that there's a big aggressive seller. Remember, the market can't go down. So just because there's sell limits here does not mean that the market is going to go down. Remember that, right? So the market was halted by some supply sell limits. They absorbed the demand. Then an aggressive seller came in and they started selling, okay, at market price. Whatever the next market offer was, they want to sell to hit that offer. So that means that they're willing to go lower. So they've assumed whatever demand was here, they acquired that, right? Those buyers took that supply. Then they went on aggressively and sold to push the market down. So this is a big indicator for us that even if we entered from the 4 hour candle, we're good. That's a 1 to 3 if we wanted to enter to here. But I would say now that prices came down here and created this low down here, we would be good to have our TP1 here at a 1 to 6. If you're not comfortable, 1 to 3 is fine. This zone is fine. There's rejection here. But you could take that. You got more than a 1 to 3 right there, 1 to 3.6. So we just see this, that's enough, right? So here, the 1 hour, look at the 1 hour. Beautiful. Evening star, right? If I saw this in the 1 hour candle, I'm in there, 1 to 5 position. We are eating, okay? If you held it lower to the demand, it's a 1 to 9 position. Okay, just imagine you can almost beat the challenge in one trade, but you need to validate in your playbook. So again, I don't want to just get you hyped up. A lot of people say, man, that's a 1 to 10, 1 to 20. But what I want you to see when you're validating how often the 1 to 9 works, how often the 1 to 5 works. Okay. So realistically, when you back test, the best zone to take profit at is this one because it's a potential rejection zone. So take that first 85% there, then you can let it ride to this next zone around here somewhere, right? And the reason why that 7.5% is good is because we're going to be trading bigger accounts. So remember, 7.5% may not seem like a lot, but if you're risking 1K, if you're risking 1K, you know, that's $75, right? And that $75 now times, what is it now? 9 is $675 extra. Okay. Now, but let's multiply that though. Let's say you're doing $1 million account. Well, let's just take it up to let's say you maxed out with FTMO. So you maxed out with FTMO. Now that becomes a $2,700 extra for that second position. Okay. So this adds up. This is a system, and I'm teaching you it so that as you scale up in your account, you'll see how that's extra money on the table. So we took at 1 to 3, this is at 1 to 5, right? We risk 1% to make about 4 point, almost 5%. Then we're going to leave the rest of these. We're going to have a small position that's going to go 1 to 9, and then a small position that's going to go 1 to 13. And you don't have to let these run, but if the market just melts for a reason, you have an extra 20 at a 400K account. You have an extra 2,700 here, and then you have almost an extra, a little bit over almost 5K you're going to have here. So that's extra money because you're holding. So why don't you go ahead? Your assignment is to do this. Create your first playbook. I've already shown you the risk table in the risk management section. So watch that section for creating the risk table. And then the unvalidated plays. When we get to how to validate a setup, we'll talk about your unvalidated plays. Please put your comments and questions in the comment section. See you in the next video.